All right, hello everyone. We're going to review the portfolio once again. It looks like the portfolio did not have a good day. I am down $169, and in the after hours, I am up $9.15. So we can see quite the volatility that happened in the morning here. It looks like the portfolio was doing okay when the market opened up, but then we just have a straight line down. So yeah, there's a lot of stuff going on in the markets, guys. The trade war is starting to improve a little bit. The tariffs are not as intense as they once were. There's a lot of stuff going on. There's a lot of agreements going on. But let's quickly take a look at how I've been doing for the past year. I'm only up 3%. So I'll take 3%. It's better than being in the negative. But you guys can see all these dips right here, starting from that correction back in 2018. December 21st, 2018, there's a massive dip in the portfolio, almost down 10%. And they have all these peaks and valleys here. You guys can see right here, down 5%, down right here, down 2%. So the markets have not been, I guess they've been doing okay for the past year since I'm actually up. I don't know if that's contributed to dividends rolling in. I don't know if that's contributed to like swing trading, but I would rather be up than down. So all time I am up 10%. So not bad. I can definitely do better, and I'm trying to improve the portfolio just a little bit here. I want to quickly talk about the moves that I've been doing in my portfolio. You guys know in the last video I was talking about valuation and getting the best deals for my money, and we have been moving some stuff around in the portfolio, so we might as well just get to it here. You guys already know that I'm a big fan of Apple, but Apple did not have a good day. It is down almost 2%, 218.45. What happened with Apple was that a report came out by Goldman Sachs that lowered its price target all the way down to I think around $160, maybe like $168, but they had an original price target of $187, and after that they lowered it down to like the 160. So a lot of people just they sold off once they saw that report, and Apple countered back. They fought back and said, hey, don't believe Goldman Sachs, they're just saying stuff to manipulate the price or something. But yeah, Apple did not have a good day. Obviously a lot of investors bought into what Goldman Sachs was saying, and Apple tanked. So 10 shares, 179.76. I am up $386 with the stock. I am still up 21%. At one point I was up almost $500 with Apple. So Apple is a very strong holding into the portfolio, and that is one of the reasons why I'm probably up for my year chart. So we can see 3M here starting to go back up, 171.44. Very good day for them. Average cost 161. I wanted to buy this. You guys already know I wanted to buy this around 160, but I just jumped right on in. 10 shares, $99. This is a dividend aristocrat. Actually, I think this is a dividend king. They've been paying their dividends for quite a while, and we can see all these dips and peaks and valleys, especially right here. There's quite the volatility right here, starting from this point, April 24th, 2019, and then there's just a straight line down, guys. So there's definitely some value here with 3M 159. You can see that May 31st was a pretty good buy there, and it's just been flat. I guess investors have been just buying up around that 158 159 dollar mark. So 3M is definitely starting to creep back up here. NRZ, new residential investment, 1511. I still have 170 shares of this company. This is by far, I said in the last video, by far the riskiest stock into the portfolio because it does pay a pretty good dividend yield. One thing to note is that NRZ should be announcing their dividends. They should be announcing how much they're going to be paying. I'm expecting a payout of 50 cents, and with 170 shares, that's around like $85. So again, I've spoken before about how the portfolio is generating over $100 per month, and I took I did some basic math here. You guys know the mean, the median, and the mode, and the mean, with the mean being the average. I am averaging about I want to say $126 each and every single month. So just through dividends alone, I'm averaging $126 every single month, as long as NRZ continues to pay well. I'm actually up $177 with this stock, up 7%, and I'm sitting on a 14% dividend yield. Actually, it may probably higher than that because I bought it so low. But yeah, this is a company that's starting to creep back up here. I definitely thought these were excellent buys. New Residential Investment is a mortgage real estate investment trust. They buy mortgage trusts through banks and stuff. Yeah, it's a good stock if you can catch them on a good dip. So that's very interesting to see them up so much on NRZ. Iron Mountain and 3260, they have an ex-dividend date. So I said that NRZ, if everything aligns, then they're going to pay $85 for this for the next month. And Iron Mountain had an ex-dividend date today, or I think it's tomorrow. Actually, the ex-dividend date was today. The stock did not do very well. 50 shares, 31.80 is my average cost, and I'm up $39. I was actually up more than that, but this stock will pay 61 cents for every share that I have. So 50 shares, I want to say that's a 30.5, so $30.50 for the dividend for Iron Mountain. So if we add 85 plus 30, that's going to be well over $100. So you guys can already tell that I'm going to be receiving that huge chunks of dividends starting next month. And originally I did not qualify for RDS.B, ticker symbol Shell. I did not qualify for 3M dividends because I did not have those stocks on the ex-dividend date. So I will not be averaging $100 for this month of September, but for October and for every single month after that, I will be getting $100 a month as long as I keep the portfolio intact. So, if you guys can tell, there's some stocks that have been removed. Next Era Energy and Procter & Gamble have been removed from the portfolio to buy some more of these undervalued plays here. AbbVie 70.51. I'm going to quickly talk about why those stocks were removed, but let's quickly take a look at AbbVie. 50 shares, average cost is 65 cents. Excuse me, it's not 65 cents, it's $65.73, and the total return is up 7%, so $239 with AbbVie, and I am sitting on quite a great dividend yield. That dividend yield is incorrect. It is not 4%. It's actually closer to 6% for the shares that I bought, and AbbVie is a huge drug maker. It's a huge pharmaceutical, and I definitely thought 65 and below was a pretty good buy for AbbVie. A pretty good buy for this company, period, because they pay a pretty high dividend yield. For the shares, for the amount of shares that I have, which is 50 shares, I am going to be getting around $53 with this stock alone. So yeah, it's $53 in dividends alone with AbbVie. That is a big reason why, for at least for that month of November, that I'm going to be getting $100 each and every single month, because just from one stock alone I'm already getting like $50. But I want to talk about Next Era Energy and Procter & Gamble. Those valuations were super high. I've said before that I don't want to buy into the high here, and I don't know, guys. They were very defensive. I love the defensive plays from these stocks, but I just don't think that right now. These are very, very high PE ratios. 90. Wow, 90.27 for Procter & Gamble. And I actually believe that because Procter & Gamble has actually gone up so much here. I got lucky. I really did, because when I bought Procter & Gamble, I sold it around $90. It's way back. You got to go way back here. This is just amazing. So I sold it right here after buying it around 70, and it kept going up. And I bought back in at a 112. You guys saw the average cost from the last video, and it just kept going up. So sometimes you get lucky, sometimes you buy high and sell high, if that makes any sense. But don't press your luck. Take profits off the table, move it into a company that's on sale. AbbVie was on sale. I moved some of that money for. Actually, what I did was I moved Procter & Gamble to another stock that I'm going to quickly talk about once we get a lower portion of the video. But Next Era Energy, that was a stock I think I moved some capital, some equity out of Next Era Energy, because Next Era Energy was pretty high as well. Let's take a look at them. I don't think they had a good day today. No, they did not. Utilities are suffering right now. Down $2.25. I got out around, I think around 217, 216 or something like that. So I actually got $85 out of Next Era Energy. Probably could have got more. I could have gotten more than that. But these valuations are super high. And, listen, you can have a long-term mindset with Next Era Energy. I definitely had a long-term mindset with Next Era Energy, but I needed to transfer that capital into the lower plays here. RDS.B, fantastic company that's not going to go anywhere. AbbVie, dividend aristocrat, that's not going anywhere. Not so much a dividend aristocrat because they are a spinoff of Abbott Laboratories, but they still have a pretty high dividend. So Next Era Energy, like I said, I bought into the high and it kept going higher. Don't press your luck. Take profits and move that money into something that's on sale. So gonna miss those stocks. I increased my portfolio risk, and I probably would have been up had I bought, because I think Procter & Gamble actually did okay. Next Era Energy did not do okay, so I probably still would have been down. But those are very, very defensive stocks, and I'm going to miss those stocks a lot, guys. I'm gonna miss them. RDS.B, Shell, 57.24. Let's quickly go through the portfolio here. Average cost $55.55. I moved some more money into Shell. I sold Next Era Energy, and I moved some more money into Shell and AbbVie. So this will pay about $56 every single month. I'm sitting on about a 7% dividend yield, and I did not qualify for their dividend because I was not holding the stock by the ex-dividend date, so I will not be getting any dividends for September, guys. Unfortunately, I wish I could show you that I was going to actually be getting those dividends, but I'm not going to be giving those dividends because I was not holding the stock towards the ex-dividend date. Johnson & Johnson 130.78. I talked about this stock in the last video, and guys, I couldn't help myself. I pulled the trigger on Johnson & Johnson. I was waiting for 120, but with all the news going on about the trading war getting better, and look, I personally, I'm a person that believes that I won't believe it until I see it. I don't think that the trade war is going to ever end until I actually see that that is ending. Like, literally read that the trade war is over, Donald Trump made a deal, and the market's going to go up. That's what I want to see. I think that's what everybody wants to see. But obviously, he's saying that President Trump is saying that the trading war is getting better. China's taking tariffs off milk and soybeans. Additional tariffs off the table, so they're not going to be hit so hard there. There's optimism in the market. I don't know if Johnson & Johnson would have had gotten down to 120, but let's look at my average cost, 128.85, 15 shares for $28. So, I need to be careful about buying and selling back into these stocks because my wash sale percentages are going to start going up, and I obviously need to be aware of that. So, when I talk about long-term holdings, guys, I bought Johnson & Johnson the last time at 139 or something like that. That was not a good buy. But at 128, I think that this is a very good average cost. It's a friendly average cost. I wanted 120. I didn't get 120, but I'm happy with Johnson & Johnson anyway. AT&T 37.89 going back down, 50 shares 35.06 is the average cost, total return up 141. Huge company, not cutting their dividend anytime soon. I know a lot of people said dividend is not safe. I believe the dividend is safe. Huge company, not going anywhere. No, not much to say about them. Altria 42.25. So this is the stock I really want to talk about. This is where most of the capital Procter & Gamble was moved into because these are consumer staples that I have evaluated, and Procter & Gamble with its high with its high price to earnings ratio, I think they're overvalued. So we're going to move that money into Altria, and we're going to look at their nice dividend yield. They just increased their dividend yield from 80 cents to 84 cents, but my average cost is $43.91, and I am down $41. So again, this is a risky investment right now. This graph here is just a straight line down. I think that there's going to be a lot of people trying to time the bottom, and a lot of people are going to lose a lot of money. So I am going to just leave it right here. I'm going to buy 25 shares at the average cost of $43.91, and I'm just going to see what happens. I'm not going to touch it. I like their dividend a lot. This is going to pay, I think, around $21 for the month of January. So actually, I think Altria's ex-dividend date was today. So Iron Mountain and Altria had ex-dividend dates today, and that's the reason why the stock went down so much, because they took away 84 cents. The dividends comes out of the stock price, so 84 cents was already gone from the stock price, and Altria is getting hit in the chin. This stock is really in a bearish mode right now. The P ratio is friendly, the market cap is just absolutely tanking here, and the dividend yield continues to rise. Enbridge, $34.99. Very good day for them. My average cost is $34.75. 25 shares. I'm up $6 for them. I bought Enbridge because I just like their diversity amongst the international sectors. Canadian energy, I've talked about this before. I know Shell is pretty diversified as far as being like one of the mainstream energy stocks on the market, them and Exxon. But Enbridge has a very good portfolio. They have very good diversity internationally, Canada, and that's something that I value. So I'm looking at some plays that's maybe outside of the US that I can take advantage of, and that's the reason why I bought some Enbridge. This will pay, I think, $13.75 for the month that it pays on. I think it's around I think they pay in, I think I actually missed the ex-dividend day for Enbridge, so unfortunately I will not be getting dividends from them. Power Shares S&P 500, high dividend, low volatility ETF. My average cost is $38.86, 125 shares, and this ETF is up huge. It's up 10%, $400.95, and you guys know that I have been getting those dividends. Those dividends have been going in, and we're going to just filter out here. Just take a look at the dividends, and you guys can see that there is some major compound investing going on. $19, $15, $15, $15, $14, $14, $14, $10, and then it just goes down to $3 from there. But some really major compound going on with SPHD with some nice capital appreciation. Guys, I've said it before, this is one of the best ETFs on the market. If you can get them on a good dip, this will be a huge buff for your portfolio. They are very defensive. I don't like how this ETF is heavy on REITs, because I definitely have a lot of other REITs in the portfolio, but this is my favorite ETF on the market by far for what it does. I know it has a 0.30 PE ratio. It has a, not PE ratio, it has a 0.30 expense ratio, which is kind of high, but it's not too bad when you factor in that it pays monthly dividends. So, and that's going to do it for my portfolio, guys. I think I've wrapped things up. I've talked about why Procter & Gamble and Next Energy, very defensive plays. Again, I'm annoyed how I had to sell those stocks to buy some more, Altria, which is very good friendly prices down here. This probably could go lower, guys. It's serious. It's really serious. This money can all disappear, and I can be right back down past $25,000, and I'm gonna be angry, and it's gonna suck. But that's the risk that we take if we wanted to compound our dividends and get the most of for our money. Once again, I believe Iron Mountain and Altria ex-dividend dates were today, and I think NRZ is coming up. So if we factor in all those dividends, and I haven't taken account of PhD paying that high dividend, they're paying monthly dividends. So if we take, I'm looking, obviously I have an Excel spreadsheet. I'm not going to post it now, but I'm probably going to post it on one of these days so you guys can see. I guess somebody wanted to see the dividends. Let's filter out here. I want to filter out dividends. You guys can see I've been depositing money into the portfolio, not too much, but stuff that allows me to do limit sales. Not limit sales, limit buys. I did a limit buy for Enbridge, but I needed to put in some more money, so I just put in enough money so I can do that limit buy. Next Energy, $12, Johnson & Johnson, $14, BA, 10, SPHD 19, Apple 7. So you guys can see there's quite a bit of compounding going on here with these dividends. Again, I'm not going to get $100 each and I'm not going to get $100 for the month of September because I did not qualify for Shell's dividends, which would have paid me about $56 alone. I did not qualify for 3M dividends. They would have paid this month. I did not qualify for them because I was not holding the stock when that ex-dividend date was approaching. I did, however, get SPHD. Well, I will get SPHD because I'm holding it. BA, Johnson & Johnson, and NextEra Energy looks like that's the next one that's coming up. I actually did qualify for their dividends. So that's gonna do it, guys. Let me know what you guys think about the portfolio. Listen, I know the portfolio has taken on more risk because Altria is just tanking and no one knows where the bottom is. Oil stocks are still bearish. They're starting to go back up, but who knows what's going to happen there. Johnson & Johnson, I like them, but the lawsuits. Let's take a look at AbbVie. AbbVie's starting to rebound. Actually, they got upgraded today, which I thought was kind of odd because you would figure that an upgrade would happen somewhere around here. Around this area right here, but they waited all the way up to here to upgrade the stock, which I thought was interesting to see there. A lot of risky stuff, a lot of economic sensitive stocks that's really get affected by the market if the market decides to tank and President Trump places more tariffs on China. There's going to be definitely a 3M drop here, another 3M drop that is going to be of epic proportions. So let me know what you guys think of the portfolio. $26,199. It did not have a good day, but I'm optimistic. Have a good day, guys, and I'll see you guys next time.